Hi, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Friday the 9th of February. Starting off with the S&P, which is still knocking on the door of 5,000. In fact, we're looking for much more than that. We're looking up to 5170 at the top of that rising trend channel from back in October. On the downside, recent resistance on the way up, 4940. So that's a first port of call if we do have a setback, and then the floor of the channel there, 4905, would be the second pullback level. But at the moment, looking for 5,100 plus by the end of next month. Moving on to the stocks, and a few new names today. Cyclerion, here we've got a broadening triangle which we've identified back in August, but here the target up to $5.60 while we hold above the 50-day moving average at $3.20, encouraged by the way that the 50-day line has been rising since the middle of December. Conduit is next. Now here we've got a potential rising trend channel base, top of the channel there heading towards $8.80. Obviously there is the barrier there of the 50-day line currently at $4.20, which is the first target, and we would like to see the share stay on the right side of $2.50, which is recent support for the shares. Moving along to another front foot situation, and it comes in the form of Elicio Therapeutics here, bouncing off the floor of this broadening triangle from back in September. Initial target here, the 50-day line, $5.80. Otherwise, we could be looking at as high as $12 by the end of next month if we get a decent push back above that 50-day line. We've had a bear trap from below the January support, so we don't really want to see the shares on the wrong side of the $3 level. Moving on to another bright situation, Foghorn Therapeutics, and bear trap gap reversal here, just knocking on the door of the 50-day line around $4.80, end of day close above that. We could be looking at $7.50 by the end of next month to take the shares back to where they were back in September. The next situation is one we haven't looked at before, but hopefully it will be a regular here. We've got a broadening triangle base for healthcare triangle, and that's quite appropriate really, that triangle there on the daily chart since September. Target there $6 by the end of next month while we remain above recent resistance on the way down around $3.20 on an end of day close basis. I suppose you'd have to allow down to the 50-day line at $2.90 in that situation. One of the more followed stocks is coming up next, Jinn Medical. Here it's normally a rocky ride, but generally a satisfying one. What you can see here is that we're in a rising trend channel base when I draw it, and that has been in place since the middle of December. The view here is that we should see progress within this channel, the floor of the channel there around $6.50. The top of the channel as high as the resistance line projection I'm drawing at the moment, up towards $30 plus. That could be seen over the next 2 to 3 months, but obviously initially we're just looking to retest that spike towards the low 20s. Upside value while we hold above the $10 area. Moving on to stock which covered we did cover earlier in the week, Microcloud, and here almost instantly hit our initial target there, $26. The upper parallel of that line is up to $57, which we could have by the end of next month, while there's no breakback below the target line there at $26. On to Oscar Health in this case, and here we've got a rising trend channel. It's been in place since the end of the summer, and the top of the channel heading towards the $23 area. That's valid while we hold above the mid-gap area around $15 on an end of day close basis. Next up is a stock with reasonable prospects, and we've been covering this of late, Oragenics. It looks like we've got a bounce off the floor of this broadening triangle, which has been in place since the early part of last year. Initial target here, the 50-day moving average at $4.70, and then up to $6 maybe by the end of next month. The gap close signal there, so closing above the latest gap, is a positive and also gives us a reasonable stop loss area around $3.40 for that situation. We've looked at Viking before, and it's back again now, breaking to the upside. You can see that the shares have actually hit that resistance line target there around 20 or just under $29. That suggests that there's a new leg to the upside brewing, and that would be the upper parallel of that channel. That's currently heading to as high as $36. Gives us our March channel, end of March target there for the shares while we hold above the latest gap at 25. So above 25, looking for 36 or 37 by the end of next month. On to Terawulf, which we did cover in the summer, and you can see it pulled back since then, but it's having another go now, and with the sharply rising 50-day moving average there around $1.80, above that we're looking for $3 as soon as the end of next month, or even sooner than that. Finishing off in style, we hope, with Wetrade, and here the picture of a situation where we've been in this triangle base over the last, or at least the recent past, since November, breaking or attempting to break that 50-day moving average there at $3.40, above that. Looking for the top of the triangle there from back in November, as high as $6.20 by the end of next month. But the bear trap gap reversal and the bullish divergence there after the lower February low, giving the shares a decent technical look at the moment. That's it from me today. More updates tomorrow.